everyone, my name is Talita Ria Brahmana. I'm from Accounting, the University of North Sumatra. Today, I'm gonna present my presentation about accounting for partnership formation. I hope you understand what I'm saying and I hope you like my video. Thank you. First of all, what is partnership? Partnership is an association of two or more persons who co-own a business for a profit, by Drabin, 1989. Next, what is the characteristic of partnership? There are 4 characteristics. First, mutual agency. What is mutual agency? In a partnership, the partners are agents for the partnership. As such, one partner may legally bind the partnership to a contract or agreement that appears to be in line with the partnership's operations. 2. Limited life. The life of partnership may be established as a certain number of years by the agreement. If no such agreement is made, the death, inability to carry out specific responsibilities, bankruptcy, or the desire of a partner to withdraw automatically terminates the partnership. The third, unlimited liability. In partnership, must help each other to pay debts. If one partner doesn't have sufficient assets to meet his or her share of the partnership debt, the other partners can be held individually liable by the creditor requiring payment. The fourth, ownership of an interest in a partnership. A member who implements wealth into a partnership means surrendering his or her right to cultivate and use that wealth, and is fully willing to use it to achieve the purposes of the partnership. The rights granted to this partnership give the same rights as other members to lead and run the federation. And the last is participation in a partnership profit. Profit or loss from the partnership will be distributed to each member of the association based on the participation or activity of each member in the partnership. If there is a member who is actively running the business of the partnership, then that member is entitled to a greater share of the profit than the member who is not active, even though the invest capital is smaller, or can be determined otherwise with the approval of firm members. Next, there are 3 types for accounting formation. First, partnership formed by the association of 2 or more individuals who don't have a company. Second, partnership formed by the association of individuals and corporations or sole proprietorship. 3. Partnership formed by the association of 2 or more corporations or proprietorship. Let us see partnership formed by the association of 2 or more individuals who don't have a company. For example, Daniel invests 7 million rupees for cash, then 3 million rupees for inventory, and Jackson invests 8 million rupees in cash, then 7 million rupees for equipment. The entry to record the investment in partnership is in the debit column. There are cash 15 million rupees, inventory 3 million rupees, equipment 7 million rupees. In the credit column, there are Daniel capital 10 million rupees, Jackson capital 15 million rupees. Next, let us see the statement of financial positions. The NG partnership statement of financial positions for 1st April 2019 in rupees. In asset, there are cash 15 million rupees, inventory 3 million rupees, equipment 7 million rupees, and the total is at 25 million rupees. In liability and equity, there are capital partnership include Daniel Capital 10 million rupees, Jackson Capital 15 million rupees, and the total liability and equity to 25 million rupees. Next, partnership formed by the Association of Individuals and Corporations or sole proprietorship. There are two recording methods of the partnerships book when the partnerships is formed by the joining of an individual to corporation or sole proprietorship, such as the corporation's book is passed on to become the partnership's book. 2. The corporation's book is closed or not continued as the partnership's book. Next, let's go for example. Daniel Corporation's Statement of Financial Position 31st January 2019 in rupees. Asset, there are cash 15 million rupees, building 50 million rupees, inventory 5 million rupees, and the total asset 70 million rupees. And the liability and equity, there are account payable 5 million rupees, equity include Daniel Capital 65 million rupees, and the total liability and equity 70 million rupees. It was agreed that Jackson made an investment worth 50 million in cash and Daniel invests by 75 million rupees, include 50 million rupees for building and 3 million rupees for inventory. There are notes. Revaluation inventory is overstated from 5 million rupees to 3 million rupees. Daniel Company debt is taken into firm debt. To fulfill Daniel's investment by 75 million rupees, he will make a cash deposit. Next, the corporation's book is passed on to become the NJ Partnerships book. A. Jackson Investment. In debit column, there is cash 50 million rupees. In the credit column, there is Jackson Capital 50 million rupees. B. Daniel Investment. There is in debit column Daniel Capital 2 million rupees, and in the credit column there is inventory 2 million rupees. Then there is cash 12 million rupees in debit column. Then Daniel Capital 12 million rupees in credit column. The corporation's book is closed or not continued as the partnership's book. A. Jackson Investment. In debit column, cash 50 million rupees, In credit column, Jackson Capital, 50 million rupees. B. Daniel Investment. We record there are in the debit column cash for 27 million rupees, building for 50 million rupees, inventory 3 million rupees. In the credit column, there are account payable 5 million rupees and Daniel Capital 75 million rupees. This is the last type. Partnership formed by the association of two or more corporation or proprietorship. There are two recording methods on the partnerships book when the partnership is formed by the association of two or more corporations, such as one of corporation's book is passed on to become the partnership's book. One of corporation's book is closed or not continued as the partnership's book. Example: Daniel Corporation Statement of Financial Position, 1st June 2020. In asset, there are cash 9 million rupees, account receivable 1 million rupees, transportation 9 million rupees, equipment 4 million rupees, and the total asset 23 million rupees. Then the liability and equity, there are account payable 4 million rupees, Daniel Capital 9 million rupees, and the total liability and equity 23 million rupees. Then let us see Jackson Corporation. Statement of Financial Position, 1st June 2020. In asset, there are cash 6 million rupees, account receivable 2 million rupees, transportation 8 million rupees, equipment 5 million rupees, and the total asset 21 million rupees. And the liability and equity, there are account payable 2 million rupees and Daniel Capital 18 million rupees, and the total liability and equity 21 million rupees. Daniel Corporation and Jackson Corporation agree to form partnership named Daniel Jackson Partnership. The revaluation from Daniel Corporation consists of 30% of account receivable estimated to be uncollectible, and Daniel Corp must invest 25 million rupees. The revaluation from Jackson Corporation consists of transportation is depreciated by 20%, and Jackson Corporation must invest 23 million rupees. Adjusting entry from Daniel Corporation and Jackson Corporation. 30% of account receivable estimated to be uncollectible. In the debit column, Daniel Capital 300,000 rupees. In the credit column, allowance for bad debts 300,000 rupees. Next, Daniel Corporation must invest 25 million rupees. In the debit column, cash for 6 million and 300,000 rupees. In the credit column, Daniel Capital 6 million 300,000 rupees. Next, the revaluation of Jackson Corporation, there are transportation is depreciated by 20%. Jackson Capital in a for 1,600,000 rupees in the debit column. Then in the credit column, transportation 1,600,000 rupees. Jackson Corporation must invest 23 million rupees. In the debit column, there is cash for 5,600,000 rupees. In the credit column, there is Jackson Capital for 5,600,000 rupees. And the last slide, one of corporation's book is closed or not continued as the partnership's book. Daniel's investment in the debit column, there are cash 15 million rupees, account receivable 700,000 rupees, transportation 9 million rupees, equipment 4 million rupees. In the credit column, account payable 4 million rupees, and Daniel Capital 24,700,000 rupees. Jackson's investment. In the debit column, there are cash 11,600,000 rupees, account receivable 2 million rupees, transportation 6,400,000 rupees, equipment 5 million rupees. In the credit column, there are account payable for 2 million rupees and Jackson Capital 23 million rupees. If you have any questions, please drop it in the comment box, and please give me some thumb likes and subscribe my channel. Thank you.